bus Nikunj Dalmia would want to begin his day with, oh my God.
I'm just tired. You start sometimes with just fatigue or
Markets
maybe
can be
age.
fatiguing.
No age, more than anything else.
But yeah, is it really oh my God, and will we finally say, oh thank God it's behind us? Is it looking like it's going to be behind us anytime soon?
I got up in the morning and I said, TGI, thank God it's Friday. That's the first thing I got up with. No, it's not been a great week. It's not been a great week, even though it's been a okay week for global markets. Global markets have been flat with a positive bias, but for Indian markets, I think the price action has been weak, poor, unfortunately, quite decisively on the downside. If you speak in the language of Nifty is now making lower lows. Mid and small cap stocks, they refuse to come up, and there is definitely a element of compulsive unwinding in the mid and the small cap stock. So this week, if something has changed, well, I think the mood and the momentum has decisively changed. We are going through a phase of the market where we are underperforming global markets. Earning disappointment continues, hardly any upgrades, and everyone in a sense now is coming into what could be called as capital protection mode. So if liquidity which worked for the market, which was local flows and HNI activity and retail activity, that is reversing. So you don't want this kind of an activity before Diwali, but that's the way markets are. It's been a bad week, it's been a tough week, and more than news, I think it's a price action which actually has really been very damaging.
Yeah, price action has been damaging, and that's been the nature of the portfolios at individual level, because the broader markets were getting a lot of drubbing. Maybe we are just getting the poison out just ahead of Diwali so that you can do your cleaning as is done every Diwali and then start buying afresh. Hopefully that's the texture we'll follow. But the texture from the global market is coming in a bit mixed. So of course earlier we had seen solid cuts for the last 3 trading sessions, but yesterday there was a bit of a mixed cue coming in. You did have the Nasdaq, which was holding up in the green, just mildly so, while the Dow continued to be under pressure. If you look at the gold prices, they have come off a bit, so they're now staring at a level of around 2740 versus 2750 that it was trading at a couple of days ago. And even the bond yields have retraced a bit. Yesterday we were talking about 4.25% level. That was the highest that we had seen since July. Today it's come off a bit, and we're looking at a level of around 4.20. So that's the kind of setup that we have from the globe. Earnings again is ruling the roost there as well. So if you look at an IBM, a Honeywell, Boeing, these were the companies that were dragging the index there. However, Tesla has managed to add almost $100 billion in its market capitalization. So mixed cues coming in from globe as well, and it seems like they are also just dancing to the tunes of earnings right now.
So if you look at the construct of earnings, for global markets, and I'm only using US markets for reference here, numbers have not been bad at all. In fact, there are more upgrades than downgrades. India, it's the reverse. There is hardly any big number which you could call out, or any company which has delivered which really could be called as the showstopper number for this quarter. There are hardly any showstopper numbers. In fact, most of the large brokerages, they have really slashed their FY25 and FY26 estimates. From HUL to Nestle, from IndusInd Bank to Kotak Mahindra Bank, starting from Infosys to a TCS, none of the large cap companies in a sense have indicated a strong demand environment, and that in a sense is making this market go hollow. The market was moving up because of momentum and participation. Fundamentals in a sense were not the root reason why markets are falling. Now whatever could be the factor, poor earnings, fear of capital risk aversion, or pure margin unwinding, the bottom line here is that the mood and the momentum, I'm sounding repetitive with this one, has changed, and when that has reversed, that has led to a selling stampede in mid and small cap stocks. On an average, PSU stocks are down 25%, on an average defense stocks are down 30%, on an average railway stocks are up down more than 30%. So there is this really ugly part of the market which is suddenly staring at you, and now everybody who's been in the mid and the small cap space is really feeling the pain. And this week, this entire selling has only intensified. So this is a week where in a sense everybody's felt the pain of the price action, even though it cannot be corroborated with the news. The risk aversion in the market is back. Nobody is ready to take a leap of faith. If you put 2 and 2 together, global cues were okay. Earnings downgrade, okay. Not that they were that scary, but the margin trade has reversed. HNI commitments are getting lower. Net FII versus DI selling is not that scary, but the price action in individual stocks is just reminding you of God. Let me put it this way, it's very bad.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.